SMS Chee Hong Tat.
Mr. Speaker, I thank honourable members, Mr. Liang Eng Hua, Associate Professor James Lim, Ms. Hazel Phua, Mr. Louis Ng, and Mr. Satyandi Supat for their comments and suggestions on the bill. Please allow me to now respond to the points they raised. Mr. Satyandi asks how many taxpayers will be affected by the increase in the top marginal personal income tax or PIT rate, the proportion of the total PIT contributed by them, and our projections of additional revenue which can be collected. The increase in PIT rates will affect the top 1.2% of PIT taxpayers, who account for about 35% of our total PIT revenue. We estimate that this change would raise around $170 million of additional tax revenue per year based on the actual taxpayer base in Singapore in the year of assessment 2020. Mr. Satyandi also asked whether the government or IRAS has detected any attempts by high-income individuals to offshore their earnings, such as restructuring or moving their assets overseas to avoid tax in Singapore. So under our PIT regime, income tax is levied on income sourced in Singapore or received through partnerships in Singapore from abroad. And this includes instances where individuals derive income from providing services in Singapore to overseas-based employers, and they are subject to income tax in Singapore. We do not tax individuals on foreign-sourced income. For example, a person who acquires income-generating assets overseas, such as by investing in overseas property, will pay the applicable taxes and other costs in that jurisdiction. IRAS has a robust compliance and audit program to identify high-risk cases for review, and this is a risk-based assessment. And in cases of tax avoidance, IRAS also has powers under the Income Tax Act to impose a surcharge of 50% on the amount of tax imposed by IRAS. Members are aware that we have been raising our taxes for higher income individuals in recent years, such that those who earn more contribute more. As Mr. Satyandi alluded to in his question, many high net worth individuals are globally mobile, and some of them may shift away from Singapore to alternative jurisdictions with more competitive tax rates if our tax rates are too high. And if this happens, our tax base and our tax collections will be eroded. We therefore need to weigh the trade-offs carefully. Mr. Satyandi suggested that PIT could be assessed on a current year pay-as-you-earn basis so that taxpayers can better manage their cash flow by matching tax payments with current year income. So I understand the intent behind Mr. Satyandi's suggestion. It is an alternative that we considered before, and there are pros and cons of adopting such an approach. First, a current year pay-as-you-earn basis for PIT assessment means that the tax payable will be withheld every month by employers and then paid to IRAS. While it matches tax payments more closely with the taxpayer's income, it also reduces their take-home pay every month, instead of giving them the option of paying the tax using their annual bonus or other sources of income. Second, some individuals, especially self-employed persons and those with higher variable salary components, may have difficulties estimating their current year income for tax reporting purposes. Third, such a system could result in greater compliance costs for taxpayers and higher administration costs for IRAS compared to the current arrangement where individuals pay their taxes this year based on actual income earned in the previous year. To help taxpayers with their cash flow, which I think is the intent of what Mr. Satyandi's suggestion is about, IRAS allows interest-free GIRO installments up to 12 months for individuals and 10 months for companies. For those who have difficulties paying, sometimes due to unforeseen personal and family circumstances, they can approach IRAS for assistance. During the economic downturn, such as in 2020, we automatically deferred gyro deductions for corporate tax and income tax for self-employed persons to help them manage their cash flows. Mr. Satyandi also asked if we could extend the approach taken to ease insurance companies' tax filing compliance by harmonizing the accounting basis to other general taxpayers. I wish to clarify that insurance companies, like any other company, are not required to prepare a separate set of financial statements for tax purposes. Companies use the information in their financial statements primarily to prepare their tax computations. Due to changes in the financial reporting standard for insurance contracts, the financial statements of insurance companies will no longer include some information needed to prepare their tax computations. We will allow insurance companies to use the relevant information in the regulatory returns filed with MAS for tax computation purposes. So I would now like to address the comments from Associate Professor Jamus Lim. So I think first to clarify, we don't have, if I heard Professor Lim correctly, excess revenues. There was some one-off upsides that we got this year. I think he acknowledged those points as well, from property, for example. But the overall fiscal space for Singapore remains tight. And especially because looking ahead, we also have some structural changes in our society, such as aging population, which will require us to spend more on healthcare. This has been explained previously by DPM Wong and also, I believe, DPM Heng when he was Minister for Finance. Second, on the impact of GST, we have already provided for a comprehensive offset package, and DPM Wong has also given the assurance that we will update the package to ensure that we take into account higher prices. So yes, inflation is higher than when we first started, but our assurance and our commitment remains that we will make sure that lower income Singaporeans will not feel the impact of the increase in GST for at least 10 years. That commitment remains. And so third, on the impact of higher prices, I think DPM has also said in this House and also at other forums that the government is monitoring closely what is the impact of higher prices on households, on families, and especially on lower and middle income households. Because, as I mentioned in my reply to Mr. Ang Wei Neng earlier, during the question time, that lower and middle income households, they face a bigger impact from rising prices. And so therefore, we want to make sure that we provide more help to these families. And there will be some, as Professor Lim also acknowledged, that will be broad-based and would be helping every family, like the CDC vouchers and the household utilities credit. But there will be some that are more targeted towards lower and middle income households. And this is important also as we look ahead, how we can help our companies to transform, improve productivity, become more innovative, more competitive, help our workers through our tripartite partnership with employers and with unions to upskill, to become more productive. Because this is still, I think, the most fundamental and most effective way of helping our workers to cope with rising inflation, is to help them to increase their wages in a sustainable way through a combination of policies, but also through skills upgrading, productivity improvements, making sure that Singapore's economy remains competitive. And if you can do that, then as Professor Lim mentioned, you can then have real wage growth, real income growth. So I want to also thank Professor Lim for his suggestions earlier. I think he gave some ideas of what could be done. These are actually very much in line with what the government has already done. And some of the existing measures, he mentioned GST voucher, he mentioned some of the support packages that we have, some of the rebates that we can give. This is something which we have done. And as DPM Wong said, we will continue to monitor the situation. And if it's necessary to do so, we are prepared to provide more help to help Singaporeans to cope with rising prices. Sir, let me now address questions raised on the amendments related to the Board of Review, BOR. In relation to Mr. Saktiandi's query, we will not hardwire the factors guiding the exercise of the chairperson's discretion in regulations. Different cases may bring up different factors and considerations, and the chairperson would be best placed to make a judgment call, taking into account the pertinent facts and circumstances in individual cases. Bless you. Mr. Louis Ng asks a related question on whether the chairperson will consider parties' preferences in deciding whether to appoint a single-member quorum. The parties may indicate their preferences in their submissions, and these inputs will be considered by the chairperson in making the decision. On the appearance by an appellant company before the Board of Review, the proposed new Section 82 is intended to make clear that there is no need for physical hearings to be held. It does not alter the existing position on who may appear before the board as an appellant company representative. Mr. Ng also asked if the substitutions of certain terms are intended to be significant, such as replacing do not consent with object, and replacing in the absence of member of board to by committee where member becomes unavailable in Section 80A. So these changes are meant to streamline the language of the provisions for better clarity. They do not effect a change in the substantive meanings of the terms replaced. Mr. Ng also sought clarification on whether any difference is intended between Sections 80A and 80B as to whether the objection of a single party is sufficient, or if such objections will have to be made by both parties. The intention is the same for both sections. If any party objects, the matter will have to be reheard either by a new hearing committee or the newly appointed single-member committee to ensure fairness to the parties. Next, I will address the clarifications raised by members on the proposed amendment to facilitate the disclosure of information by IRAS for official duties. Mr. Liang Eng-hua sought clarifications on the evaluation process and governance for data sharing. IRAS evaluates each request for information against existing tax legislation, as well as a standardized set of criteria set out in the government's instruction manual. And this includes ensuring that the purpose of disclosure is aligned with what is allowed in legislation, and that the information requested is proportionate and relevant to the purpose. Mr. Ng asks under what situations IRAS would share information with public sector agencies and authorize third parties, with the consent of taxpayers under the amended Section 612. Currently, with taxpayer consent, IRAS is already allowed to disclose information to public sector agencies and authorized persons engaged by the government or a statutory board, if the disclosure is for the sole purpose of administering a written law or public scheme. The proposed amendment to Section 612 in this bill allows IRAS to disclose such information for purposes beyond that of administering a written law or public scheme, as long as it is for official duties. Mr. Ng also asked if it would constitute a contempt of authority for refusing to provide consent to the disclosure of information under this section. I would like to assure Mr. Ng that this will not be the case, and the taxpayer is allowed to withhold consent. Mr. Ng and Mr. Saktiandi sought clarifications on the process of seeking consent from taxpayers to share their information. The agency seeking consent will provide sufficient information in any request for consent so that taxpayers can make an informed decision whether to give their consent or not. For example, the taxpayer will be told upfront of the information to be disclosed, the purpose of sharing such information, and the persons whom the information may be disclosed to. Consent that had been provided by taxpayers for IRAS to disclose the information for a purpose under the ambit of administering a written law or public scheme will continue to be valid. And should public sector agencies require the information for another purpose beyond administering written law or public scheme, in the future, fresh consent will be required. And this will need to be obtained under the new Section 612 as amended by this bill. Mr. Ng and Mr. Satyandi asked about the basis for the prescribed list in the proposed new Section 612B, which can be shared by IRAs with public sector agencies without requiring taxpayers' consent for the disclosure. As I explained in my speech earlier, we have taken a calibrated approach to safeguard information confidentiality. The prescribed list of information under Section 612B is limited to company-related information that have been more frequently required by public sector agencies. And this includes the range of revenue earned by the company, and a yes or no indication on whether the company has claimed tax deductions, such as for R&D expenditure in Singapore or expenditure on overseas business development. So these information in the prescribed list will be disclosed in less granular format, in ranges or as a yes or no field rather than the exact value. Ms. Hazel Paul observed that the prescribed list could potentially be expanded to allow sharing of information, and I think she acknowledged the point that I made that it will only be for company-related information. So I want to assure Ms. Paul that this will continue to be the case. The prescribed list will only be for company-related information. Collectively, these proposed amendments are intended to facilitate efficient data-driven policy making, operations, and integrated service delivery for public sector agencies to serve the public more effectively. I agree with members on the need for robust safeguards even as we do so. This is very important. Information on taxpayers will continue to be safeguarded under existing tax legislations, the Official Secrets Act, and the Public Sector Governance Act, as well as data governance and security policies set out in the government's instruction manuals. Besides offences stated in the tax legislations, the Public Sector Governance Act further criminalizes the acts of unauthorized disclosure of data, improper use of data, and unauthorized re-identification of individuals from anonymized data. Ms. Paul asked about the adequacy of penalties for unlawful disclosure of information by an authorized third party engaged to assist public officers with their official duties. For unlawful disclosure constituting an offence under Section 6 of the Income Tax Act, penalties under Section 94 would apply, and this carries a maximum fine of $5,000, or in default of which, imprisonment not exceeding 6 months. For such unlawful disclosure, the offender could also be subject to penalties under the Official Secrets Act, Personal Data Protection Act, or other relevant acts. So it's not only through the tax legislation, but also through other acts. As Mr. Satyandi pointed out, there is a need to continually bolster our data security in the face of evolving threats. The government has been actively strengthening our data security regime to protect sensitive data. And this is an important area of work as we become more digitally connected. Mr. Speaker, I beg to move.
Question is that the bill be now read a second time. As many as of the opinion say aye. Aye. To the contrary, say no. I think the ayes have it. The ayes have it.
Income Tax Amendment Bill.
Committee stage, what day?
Now, sir, I beg to move that Parliament will immediately resolve itself into a committee on the bill.
Question is that Parliament will immediately resolve itself into a committee on the bill. As many as of the opinion say aye. Aye. To the contrary, say no. I think the ayes have it. The ayes have it. The question is that clauses 1 to 49 stand part of the bill. As many as of the opinion say aye. To the contrary, say no. I think the ayes have it. The ayes have it. Bill to be reported. Deputy Prime Minister, Minister for Finance.
Speaker. Speaker, I beg to report that the bill has been considered in committee and agreed to without amendment.
Third reading, what day?
Now, sir, I beg to move that the bill be now read a third time.
The question is that the bill be now read a third time. As many as of that opinion say aye. To the contrary, say no. I think the ayes have it. The ayes have it.
Income Tax Amendment Bill.